Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we have come to the final day of the trade for this week, and so far this week Nifty is already down by nearly 1%. So unless we see a surprising rally today, it is quite unlikely that the Nifty could reverse its course. But yes, the Nifty is set on course to snap its two back-to-back weekly gains today. But whether or not Nifty can reclaim its 25,500 mark is something that we would watch out for and something that we would hope for, because there's a good support that is coming in from the global markets. If you look at the US markets, yesterday that closed higher overnight. S&P 500, Nasdaq, both of these indices were at record highs, and even Dow Jones jumped over nearly 300 points, given that they saw a strong US jobs report. We saw that the non-payroll data rose for the month of June, and even the unemployment rate in the US also fell in for the month of June. Now, this also kept traders predict that the Federal Reserve would keep interest rates unchanged in the meeting that will be held later this month. If you look at the CME FedWatch tool, that indicated that around 95% of the market participants would want Federal Reserve to keep rates on hold. Now, this also helped dollar index retreat from its lows. It has been hovering around, its lows about 96 to 95 from the past couple of sessions, but today it stayed above that 97 odd levels. And even we saw the 10-year Treasury yields in the US got spiked up by about 4.3% or so. Now, apart from the jobs report, another important update that also came in from US was the House passing Trump's big beautiful bill. It did pass with a narrow vote, but now the bill is set to be enacted as a law, and it will be going to President Trump for the signatures. Coming back from the US to our own markets, we had a development that came in from the market regulator, an important development from SEBI that came in that has barred US proprietary trading firm Jane Street from accessing the securities market due to unlawful gains earned by their group entities. We'll get to this development later in a bit, and we'll also check with our experts how this development affects the sentiment of trade going ahead. We'll also take some stock-related queries, so keep dropping them on our live feed and we'll take them up shortly. And we'll also take some stocks in focus. For instance, we have some financial stocks which have continued their quarterly updates. We'll address some of those, and of course, much more ahead as well. Now, without much further delay, we'll take a quick look at the top headlines. Stocks in Wall Street end the trade higher, followed by stronger than expected jobs report. The Dow Jones jumped as much as 300 points, while the S&P 500 and Nasdaq set new records. Asian markets opened mixed as investors assessed US jobs report and trade deals with countries. Meanwhile, the GIFT Nifty is hinting at a mildly positive start for our own markets. Crude prices continue to be steady while gold prices slip over 1% as strong US jobs report fuels hopes of the Federal Reserve keeping its interest rates on hold. Market regulator SEBI bars US trading firm Jane Street from accessing the local securities market. Unlawful gains worth about 4,800 crore rupees to be impounded, making it the highest in the Indian history. Banks aware Jane Street have accounts and have been ordered to make no debits without SEBI's permission. And Donald Trump's tax bill gets its final hurdle cleared in the US Congress as the Republican-controlled House of Representatives narrowly passed the bill and sent it to the president for signatures. All right, if you look at the last session, we did see that the Nifty saw a bit of a selling pressure at the higher levels. We did start in the green. However, we ended the day on a negative territory. Nifty ended with about 25,405 levels amid a choppy expiry session. So a lot of volatile swings were also exhibited in the market yesterday. But yes, Nifty did extend the loss for the second straight session. But if you look at the broader end of the markets, that brought in some support and of course some respite to the markets, and then that helped some of the downside to be capped as well. If you look at the broader end of the markets, both of them outperformed the benchmarks. Nifty small cap particularly snapped its 2-day losing streak to end the day higher. On the other hand, if you look at the Bank Nifty index, that continues to be down for the second straight session. On the other hand, Nifty Auto Index, one of the top sectoral gainer, up for the second day. Even Nifty Pharma also did quite well, and it was up for the 10th straight day. On the other hand, if we look at on the flip side, Nifty PSU Bank, that was the top sectoral loser, down for the second consecutive session, and Nifty Realty fell for the sixth straight session as well. But yes, now let's talk about some of the important update for today. That was your SEBI order on the Jane Street Group entities, which have been restrained from accessing the securities market. Now, the group entities have been prohibited from dealing in securities, be it buy, sell, or even dealing in the securities market directly or even indirectly, because they have been subjected to some of the unlawful gains, which has been amounting to about 4,800 crore rupees, which has been impounded. Now, the entities have been directed to open an escrow account in a scheduled commercial bank to deposit all of these unlawful gains, and the banks who have these Jane Street Group accounts have been ordered to ensure that no debits have been made without SEBI's permission. Now, if you talk about Jane Street, that is a global proprietary trading firm in over 45 countries, and it uses algorithms to identify some of the trading opportunities in the market. So yes, this comes as an important development on that front. But coming back to some of the cues for the trade setup, FIs that continue to be the net sellers on the stock. They sold stocks which was worth about 1,500 crore rupees in the cash markets, and the DIIs continued to buying stocks which was worth about 1,300 crore rupees in the cash markets. If you look at the option cues data, that shows a little bit of an optimism. Nifty put call ratio jumps to about 0.99 from 0.78 levels in the previous session. On the other hand, if you look at the FNO ban list, RBL Bank, that continues to be a part of the FNO ban. Now, just a couple of minutes before we address the market open, just 3-4 minutes to go. But at this point of time, pre-open rates are pointing out to a mildly positive start. Sensex with about 67 points. Nifty is also above that 25,400 odd levels. But yes, it's a flat and a quiet start that we're expecting from the GIFT Nifty and of course from the pre-open trends also. But with that, let's quickly get on board with our technical expert of the show. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, good morning. We've been seeing a fairly choppy trade this week. Nifty down nearly 1%. How are you viewing the charts right now?
Yeah, good morning, Lovisha, and thank you for inviting me to the show. So the way the markets have been behaving the entire week, it's clearly evident that there is a dull sedentary movement, and it has been ending on the downside. But then when you look at the range which is emerging, it's clearly evident that the market is awaiting some triggers. Now, yes, we are having some global triggers as well as some domestic triggers are expected in the coming sessions. So that's what we will be anticipating, and we are ending the week on a bit of optimism that yes, the markets are looking forward for some move ahead. But after the move about 25,000, the markets have not really been able to sustain. And like you rightly mentioned, the option data is clearly indicating some optimism. But then what is not happening is that it is not unfolding into a trend right now. So we are caught in a range, and it would be best to trade intraday. And if you have the patience and the capital, it will be more beneficial if you can actually hold your positions for a multi-day kind of a scenario, because the bias clearly is on the upside, but then it is taking its time to unfold.
Taking its time to unfold. What about the Bank Nifty index, Raja? Because it is down for the second straight session. How do you expect it to further perform going ahead?
Yeah, what I've observed that the Bank Nifty is a much talked about index, but then it's very heavily skewed towards two stocks. So now, if you are going to build your bias based on Bank Nifty, that's what many of us do. So it's not clearly giving us an evidence. Instead, if you look at the the bank's associated sectors like the autos, NBFCs, those are the ones which are actually giving us some clues, and I find that even they are not performing. Even the real estate is dragging. So right now the real estate, be the real estate, autos or NBFCs are dragging right now. So I will wait for a while, and the Bank Nifty is clearly pressured right now. So I would wait for some more time till some kind of clarity emerges. So at the moment, I could say that the Nifty as well as the Bank Nifty are definitely in the cloud at the moment.
Okay, definitely at the cloud at the moment. But yes, the first trades that is coming on, we have opened in the positive territory, but a very mild and a quiet start for the markets. 25,450, that is where Nifty is at this point of time. If you look at the Sensex, also very mildly, marginally higher at this point of time, 65 points higher for the Sensex as well. If you look at some of the sectoral indices, Bank Nifty index, like we were talking about, has opened marginally in the green, trying to snap its two-day losing streak at this point of time. But yes, Nifty Auto Index, after yesterday's good performance and of course one of the top sectoral gainers, it has slipped into the negative territory, seeing a little bit of a profit booking on that front. Now let's take a look at Nifty IT index, because that has been doing a little well compared to other sectoral indices. 0.2% gain that is coming in from the Nifty IT index. We did see a good jobs report that came in from the US as well, and of course the Trump's tax bill, which got clearance from the US House, which is said to be enacted as law. So some of the IT stocks doing well on the back of this news as well. If you look at some of the metal index has cooled off with about 0.1% cut coming in. Nifty Pharma index, after yesterday's good performance, extending its gaining streak to the 11th straight day. Nifty Realty index, like Raja was talking about, that has opened mildly in the green at this point of time, trying to snap its 6-day losing streak at this point of time. Nifty FMCG index, however, with about 0.2% gains that is coming in. And if you look at the broader end of the markets, the mid cap and small cap indices, both of them are underperforming at this point of time, seeing a little bit of a setback, small caps particularly, with a downtick of about 0.2%. If you look at India Wix, that has jumped by about 2% at this point of time, so some volatility could be expected in today's trading session as well. If you look at some of the top gainers and losers on the Nifty 50, Bajaj Twins doing well, Bajaj Finance with about 2% gains coming in, Bajaj Finserv with about 0.7%, Bharat Electronics, Bharat Airtel, Bharti Airtel, Wipro, all of them doing well in today's trading session. On the other hand, if you look at on the losing end, Trent is one of the top laggards in today's trading session with about 7% downtick that is coming in for Trent. Tech Mahindra, Tata Steel, M&M and IndusInd Bank continue to be some of the top losers as well. But let's take one stock in focus, that is your ONGC. Let's take a look. It is down about 0.2%, but we did see an update that came in yesterday where the company has entered into a strategic heads of agreement with the Japan's Mitsui OSK lines. It is to build, own and operate two very large ethane carrier. Raja, if you look at the stock hasn't really moved much, in the past couple of months. But what do you expect the near-term holds for ONGC?
Yeah, especially the oil and gas space has something not that's showing much of a movement right now, except for the OMCs, I would say. So yes, you are having some mixed reactions, and when talking about ONGC, it has been laggard and it has been in a sideways phase for quite a while. So the entire year of 2025, it has spent in some consolidation, and it's a good investment bet. Yes, the stock is showing some upside, but then it would demand some patience because it would take a while for the returns to unfold.
All right. Let's take one stock in focus. We are seeing a sharp decline in this counter. That is your Trent, because we saw that Nuvama has downgraded this stock to about hold and on slower growth outlook, and has even slashed the target price because they believe that there's a slowdown in its core fashion business and a mismatch between the growth trends, and the stock is already quite overvalued. If you look at from the year-to-date perspective, the stock has not been doing well with about 20% downtick that is coming for the counter, but the stock is still well above, still up by about 22% or so from the April lows itself. But so far this year, the stock has been underperforming. Raja, anything that you're expecting from a near-term perspective for Trent? Because the stock has been an underperformer.
Yeah, the stock had actually labored, and the entire FMCG space itself has labored itself from the April lows. But then after this downgrade, it definitely has impacted the movement here. So now any reaction to the way up is going to meet with some supply. And I would say that yes, if you are a holder in this stock, so in case you have bought it on the recent rally, today's the immediate low which has been formed could be a good point to exit, because if it breaks the low which has formed at the market open, it could actually head further down. So it's in a very precarious condition right now, and it's not reached any kind of supports where you could buy into. So I would say that if for a fresh entry, it's an avoid, and for those who are holding it, who bought it on the rally, should consider today's low as an exit point.
Okay, all right. Let's take some viewer query that is dropping on our screen. The first query coming in from Naveen. He's asking the view on Blue Star because his entry price has been 1500, and he's asking whether he should hold or exit the counter. He's seeing a bit of a profit at this point of time, Raja. What do you suggest? What should he do?
Yeah, definitely Blue Star is on a very good run, and yesterday even Volta showed some spirit. Now it's forming a nice rounding pattern, and I would say that yes, it has got some more room to the upside. So one could adopt a trailing stop loss and place it at around 1750, and trade it towards a region of around 1880 to 1900. That looks like a potential target in the next few sessions.
All right. Let's take another viewer query. Debuk is asking his view on Bajaj Finserv. He's saying that the stock is down by about 60 rupees because what are his views? Because he had invested it at 2047 per share. The stock is looks like it's entered a consolidation zone. Raja, what do you suggest? Any target levels that you're watching out for the counter?
Yeah, right now it has been showing a steady upside, and the current phase, the market itself is in a consolidation phase. So I would say that it is advisable to hold on, because yes, the stock has got more potential, and it has got a potential to reach towards 3000 in the next 1 year. So it's at a very good and interesting stage that you have entered. So you should not exit the position right now.
All right. Let's take another viewer query then. Nitin Shahji is asking the view on Aster DM. The stock did hit an all-time high recently in the recent trading session. What would you suggest? Do you believe that there's more steam left in the stock?
Yeah, the healthcare space definitely is showing some promise, and over the last few trading sessions, when there has been some uncertainty, the healthcare space has is witnessing some steady upside. You can say Divi's, Apollo, Glenmark. So even Aceradium, even from the mid cap space, the pharma names are buzzing. So yes, Aceradium continues to hold more promise, and I can expect a target towards the region of around 850 within the next 6 months.
Okay, all right. That is the view coming in for Aster DM. Let's take another viewer query at this point of time. Nana Prakasham is asking the view on Narayana Hrudole for the short term. If you look at from the 6 months charts, the stellar rally the stock has been exhibiting. What would you expect going ahead, Raja, for the counter?
Yeah, the stock after its consolidation in 2024, it's shown some strong upside. Now there is definitely some profit booking considering the nature of the move. And yes, if you are making some steady profits, then you should definitely consider booking some profits now, because the prices are indicating a reaction, and the reaction could take it towards a range of around 1600.
Okay, 1600, that is where we are eyeing out for. Let's take another viewer query at this point of time. Pooja Khanna is asking that she wants to buy Sagility for the short term. What's the support and target price that she should watch out for? Sagility, anything that you want to outline here, Raj?
Yeah, this stock. This stock is not. I'm not tracking the stock at the moment, so I don't have any particular opinion on this stock.
Okay, all right. Let's take another viewer query then. The query coming in from Anil. He's asking the view on Avenue Supermarts. Yesterday we did see a quarterly update where brokerages were not particularly enthused by their Q1 business update. But anything that you're watching out for? Do you expect an underperformance going ahead for the counter?
Yeah, demand has been definitely trying to catch up, but the FMCG space as a whole, like we discussed earlier, has not been able to conjure up enough momentum to the upside. So I would say that the stock is forming a base right now, and I would wait for the levels of around 45.50 to exceed before I take any call on this. But yes, at the moment it's in the accumulation stage, and one should continue to accumulate based on the capital available.
Okay, all right. Let's take another viewer query then at this point of time. Ratnakumar Solomon is asking the view on ITC. He's asking it's been underperforming for the last 2 years without any gains. So should he exit the counter at this point of time? Of course, it's a weak price structure for ITC at this point of time. What should he do, Raja, going ahead?
Yeah, incidentally, we have been discussing FMCG names since the beginning. And yes, the FMCG space has been undergoing some pain. And despite the rate cuts and despite the budget expected to give some triggers, they have not really matured enough. And ITC continues to be in a sideways fashion. And immediate exit point would be around the levels of 390. Other than that, then there is no major worry for exit. So one should continue to hold on.
Okay, all right. One should continue to hold on for ITC. I hope you got your query answered. Let's move on to another viewer query. Manish is asking the view on Bharat Dynamics. Of course, defense stocks have been on a tearaway rally from the past 6 months as well. And of course, for the month of May, particularly after Operation Sindhu. I know, Raja, you were quite bullish on the defense pack, but anything that you're watching out for Bharat Dynamics?
Yeah, definitely. After the recent order has also been passed yesterday, so there is a definite demand for the Indian made in India defense products, and now the continuous move which we are seeing in Bharat Dynamics clearly identifies that yes, amongst the stocks that have shown some promise. After BEL, I find that BDL, which is Bharat Dynamics, is a good stock here, and it has got potential to move towards the 3,000 within the next 1 year. It's a good investment bet. One should continue to buy here or look for dips in the region of 1,800, can parcel it, but then it has got a very good potential to move to the upside.
Good potential to move to the upside for the counter. Let's take another viewer query. Rupak Mehta is asking that he's down 17% in Shakti Pumps. What should he do at this point of time? We did recently see that the Shakti Pumps did open its QIP at the price of 965 rupees, floor price of 965 rupees. But anything that you want to suggest going ahead for Shakti Pumps, because he's seeing a little bit of a downtick, about 17% or so.
Yeah, Shakti Pump was a super mover in the last year. And yes, this year, none of the, all the mid caps and small caps have not moved. So this is probably taking a pause right now. Nothing much to worry about. Overall, even on the higher time frames, it is looking, it's holding on to the higher level. So I would not be worried for exit. One should continue to hold on.
Continue to hold on Shakti Pumps. But let's take one Q1 business update that came in yesterday. Bank of Baroda, where the company has reported 11% year-on-year growth in global business in the Q1 FY26 business update. And within this, global advances have risen by about 13% year-on-year, and global deposits have grown by about 10%. Raja, if you look at the stock from May lows, the stock is up about 11%, but today the stock is not doing well. 0.2% cut that is coming in for the Bank of Baroda. What would you expect the near-term momentum to be?
Yeah, when you take a look at the current market scenario, and the PSU Bank itself have not been performing, the Bank Nifty itself has not been performing. So under that background, we can't hold out Bank of Baroda for any lack of movement here. So overall, amongst the PSU banking space, I always have been discussing in our shows that either SBI, Bank of Baroda, or Can Bank. So the pecking order will be first Can Bank, then Bank of Baroda, then SBI. So Bank of Baroda is definitely well placed. Nothing to worry about. Stock has got more potential here. I would say that until we lose 197, which is still quite far away, we don't have to worry about in Bank of Baroda because every dip is a buying opportunity.
Every dip is a buying opportunity for Bank of Baroda. But let's address another financial stock, which is your Bajaj Housing Finance, because it also came out with its Q1 business update. We did see that the lender has reported about 22% year-on-year jump in gross disbursements, and OM has risen by about 24%. If you look at so far this year, however, the stock has been exhibiting a negative trend. Raja, would you expect this underperformance to continue, or can we expect some optimism on the horizon?
Yeah, yes, over the last almost 6 to 8 months, the stock has not really been able to conjure up enough momentum. So I would say that right now I would wait for a while before I enter the stock, because the stock is definitely in a sideways consolidation zone, and there is definitely lack of clarity which I'm seeing. So I would wait before I act on this stock.
Okay, all right. Let's take a viewer query at this point of time. Jagan is asking the view on Eternal as a counter. Eternal, of course, so far this year, the stock has underperformed. If you look at from the YTD perspective, the stock is down by about 5% or so. Raja, anything that you have, you're watching out on Zomato?
Yeah, Eternal is a very good stock right now to invest because this stock is showing some very strong recovery here. And yes, with its inclusion into the indices, it's showing more promise right now. And the continuous block deals which are happening in the stock clearly indicates the fact that this stock is poised for more upside. Yes, slow and steady, but then it's got room to challenge the highs within the next 6 months.
All right. Let's take another viewer query then. Varsha Gajjar is asking the view on PNB and Canara Bank. Any views on that, Raja? Because yesterday we did see PNB coming out with its Q1 business update, but most of the brokerages were disappointed with the slower loan growth. And it's been prevalent across the industry, but anything you're watching out from a stock perspective for both of them?
Yeah, PNB once again is a slow mover, but then what it has done over the last few weeks is that it has managed to etch out its highs at around 110, and it's been holding that level. So it clearly indicates that yes, there is some positive trigger emerging. So I would, add to the pecking order, which the three which I mentioned, PNB also, and I would say that PNB is, you can put it at number one actually, considering the way it has been moving, and I would say that. PNB is poised for more upside here, and it may surprise. It may be a surprise move from the PSU banking space.
Surprise
And
move
as
for
far
the
as Canara Bank is
PNB.
concerned, I would say that wait for the moves to unfold in the banking scenario itself, because right now the entire banking pack is a little confused.
Okay, all right. All right, just one last question before we let you go, Raja. Anything that you're seeing interesting in the market as a buying pick?
Yeah, I would like to go with a buy in pharma, and I would like to go in with a buy in Biocon because Biocon, after a phase of consolidation, is showing some good move to the upside. So I would be a buyer in Biocon at around 376 with a stop at 370 for a target towards 386. And the other stock will be from the chemical industry space because chemicals are showing some good upside. One can buy PI Industries at current level with a stop at 4220 for an upside towards 4350, 4385.
Okay, 4385. All right, with that, we have to let you go, Raja. Those are the stocks that we will be watching out for. But thank you so much for your time and joining us.
Thank you.
All right. All right, let's take a quick check of the markets at this point of time before we move on to our next guest of the show. If you look at both of the benchmark indices have been trading mildly with gains. Nifty still above that 25,400 mark. But still testing those levels which was yesterday's close at this point of time. If you look at some of the sectoral indices, everyone has been trading, most of the sectoral indices have been trading with very slim gains at this point of time. Nifty Metal Index is the sole index which is trading with about 0.2% cut. So a very quiet market at this point of time. Hopefully, maybe this is what they are waiting for, is the quicker from the US India trade agreement, and that is what it could be the next catalyst for the markets. But India Wicks broader into the markets, if you look at the mid cap and small cap indices, both of them also with about very flat trade at this point of time. But with that, let's quickly move on to our next guest of the show. We have Anil Rego, founder, Right Horizon, joining us. Anil, good morning. How does the market look like at the current juncture? We have been moving in higher range now, but it lacks any enthusiasm. What can be the next catalyst?
Yeah, so I think from a fundamental standpoint, I think there are, I think, a good number of levers. Yes, markets after having run up quite a bit, coming and taking a pause, and also, mid and small caps correcting after, very, very good rally is something that I think should be expected. And we believe that these are points when, you can start looking at, investing. So reasonably positive at this point. Combination of corporate profit growth, we think will also be reasonably strong. Government capex has sort of come in. Okay, so and hopefully you'll also see a trade deal, at some point of time, which has been, yeah, getting people a little nervous. So I think there are sufficient triggers also, if you ask me, for us to start seeing things improve.
Anil, how do you assess the passage of this Trump's big, beautiful bill? Do you see some concerns of the deficit on the US economy and, of course, the spillover to the world?
Yeah, so I think the US has a bit of a problem. Okay, so fundamentally, I think that's where I guess Trump also is trying to see how he can sort of reduce trade deficits, how he can also reduce fiscal deficits. So I think this whole stuff around, looking at avenues to bring in revenue, right from through trade, any imports that happen into the US. Secondly, also now even capital flows, the 1% thing. So these I think will have a moderate impact. But the way I look at it, even for the US, it's important for them also not to shake up things too much, because if they do so, their economy also, can see, it will be brittle, and you can see negatives out there, and that is something they also can't afford. So I'm not as concerned. I think some of the pressure was to, get everybody to the table. I think so. So those have happened, and now I think one by one we'll also start seeing deals happening with sort of various countries. Hopefully, India will be the next. We already saw something with Vietnam, and so I think that's the direction that we all will be seeing.
I know. Okay, but, we did see an important update that came in today. SEBI borrowing Jane Street from the securities market, and the group was found to be running large cash equivalent positions in the index options. How do you expect and how do you see this development affecting the trade sentiment or even volumes going ahead?
Yeah, so ideally, I think maybe intervening where there is sort of misuse of the system, can be important, I think, to bring in. Okay, but at the same time, I think we must be careful not to, restrict, say, uh, genuine people coming in and taking positions, right? So I think that is something which will be important for FIIs and stuff. So we'll have to see how to balance. See where there's misuse, where a number of them, including the co-location and stuff like that. Those definitely are things to look at. But I think we have to draw the line between saying that this is misuse or this is just speculative activity, and restricting can only, also reduce the depth of the market, right? So I think we should see how to increase the depth of the market as we go forward.
Okay, increase the depth of the market going forward. Anil, let's talk about a little bit about earnings, because given that everyone is expecting FY26 to be better than FY25 in terms of growth, what are your estimates for the first quarter going ahead?
Yes, so I think one would expect this quarter to be decent. So if we saw even from the previous quarters and stuff, there has, of course, the October, November, December quarter was bad, and then March, and so I think we will continue to see sort of an improving trend out there. I believe that it will take a little bit more time because I think corporate spending still needs to rebound. The corporate capex, needs to rebound. So I think for some more time, the government support, I think, will become important. So I would believe maybe somewhere around 12% type of 12-14% type of earnings growth between various constituents, whether it's large cap and mid cap.
Okay. All right. 12 to 13% earnings growth. And this is estimating for your first quarter itself, right, Anil?
Yeah, and that's sort of through the year. So hopefully we will be within a couple of percent of that in the first quarter.
Okay. Anil, if you look at the fourth quarter, financials definitely led one of the earnings growth. But do you believe that they will continue to shine in the first quarter as well, now that we have the rate cuts also?
Yeah, so what is interesting is some of the sectors like consumer durables and chemicals and capital goods, all of them, even PSU banks, earnings growth was sort of decent. And I think that typically I don't see earnings growth suddenly, come in one quarter and go away. So I think that sort of trend will stay. And I think that will also give comfort. And so when I'm saying sort of an increasing, earnings growth. I think that's something which will also aid specific sectors, also which are likely to do well.
Okay, okay. And volume growth, that was a challenge for majority of the consumer stocks. Do you believe the situation has improved going ahead? And what kind of growth are you estimating from consumer staples and discretionary front?
Yes, so definitely volumes growth, including if you see automobiles and stuff as well, has some maybe room to grow, right? So the things are definitely not yet in a rosy, picture. It's come from a quarter which it was sort of very poor. So I think that's what I would sort of expect. Okay, but yes, I think one thing that all of us will be very closely watching is how is the growth in volumes happening, and hopefully we'll have a very good monsoon, and also the rural spending, if that also can sort of improve, then I think you'll probably see uh, volume growth also coming back, and that's something that we would also expect.
Okay, okay. And what about the capital market stocks? Because they seem to be doing quite well in recent days. Do you believe that this is going to be the next flavor of the market going ahead?
Yeah, definitely. Capital goods is even for us, it's a sector that we have reasonable exposure to. Also, because of various macro trends and factors, I think the penetration of equity is going to continue to increase. And across the board, we've seen right from say COVID, there was a big spurt. I think demographically as well, if you look at the HNIs and the ultra HNIs, that segment is growing very, very fast. And if you also see along with that, if earnings becomes stable and strong, if private capex etc. comes in, and so once there's a feel good factor and people also start investing, and things become a lot more comfortable right from grounds up level, I think that will also add. So definitely one believes that this sector is a sector that will do very well, maybe for a longer period as well.
Okay. And now that you mentioned a lot of sectors that you have been bullish on, take us something that you believe that there is growth that is still elusive on those sectors.
Yeah, so I think one to carefully watch is the banks, including the private banks, okay, and also NBFCs, of course, because both of these have had taken a bit of a lull, and so the NBFCs also have sort of started to pick up. So I think some of these sectors, in our view, will also aid a more broad-based recovery. Okay, so that is something. Then we have sectors like pharma, etc. Okay, so of course there are niche ones like within financial services, say the wealth management. Apart from pharma, we also like hospitals. Okay, so there are, I think, you have to be careful as we go forward to see which are the pockets that we can see the larger growth and the tailwinds, and then I think be able to choose the sectors that one would like to bet on.
Okay, okay. How are you finding the valuations of the broader markets? Everyone is saying that, market is mostly priced to perfection on a headline index level, but broader markets have once again turned expensive. How would you suggest investors to approach that space?
Yeah, I still think that where if I look at, let's say, the Nifty is one, and there I see a little more comfort, right? So if you go back and see the broader market, if you see, say, the BSE 500 or mid and small, especially mid, right? So valuations are reasonable. Okay, so the question now is whether we see earnings growth, right? Because if we see strong earnings growth there, then maybe it will sustain for some more time. My experience of market cycles is that sometimes these valuations go to extreme levels. Okay, so I still think there is a little bit more headroom left also for the broader market. Okay, and I'm not saying some of those really extreme levels, and there are pockets where at a stock level you can still go back and sort of invest. Yes, you pay a price for quality as well. So if there is growth which is there in some of these stocks and strong track record of it, then you may find valuations also there higher. I would also believe that, see, the mid cap side valuations are higher also because I think of the way the definition of large, mid, and small caps, because a lot of money came into mid caps, and a lot of that went into that, 100 to 250, 101 to 250 stocks, right? So to that extent, lot of money came into this one pocket. Okay, so I think that considering that mutual fund flows are still strong, that's my other part, right? Because if that continues to be strong, I think valuation will still go and still stretch a little further. So that's my view. While it is, at the higher end of the spectrum, I think that it's not yet an extreme, and combined with that, I see also earnings growth coming back into some of the mid and small cap stocks segments.
Anil, you did mention that you're seeing the valuations a little stretched, but what do you believe? Everyone in the street is talking about July could be the month, or even August could be the month for Nifty clinching its all-time highs. I know you don't provide any short-term view, but anything that you're watching out for?
No, so that's our view as well, because I think sometimes you have a price correction, sometimes you have a time correction. So I think right now we'll be almost we'll be like 9 months into a time correction. Yes, marginally also in certain pockets you have it below the index. Okay, so from that standpoint, earnings growth itself gives a bit of a time correction, and makes the P ratios and valuations look better. So I think that is something that I also expect the coming quarter. And again, if you go cycle wise, right, in terms of which time of the year, typically May is sell in May and go away. So post that, typically between now and December is where you'll see the cycle coming back to even markets doing well on a historical basis. So I think that will also sort of come in, and one is hoping that we should see, even in the shorter term, we should probably see the index doing well.
Okay, all right. All right, with that, we have to let you go, Anil, but thank you so much for your time, and we hope that we connect with you soon. Right, let's take a quick check of the markets. The markets seem to be directionless at this point of time, because the Sensex is also down about by very flat in the red at this point of time, and Nifty is also, it's above that 25,400 levels, but still flat in the negative territory. If you look at some of the sectoral indices, Bank Nifty in the red, metal index not doing well with about 0.2% cut coming in. Private banks have taken a setback. On the other hand, Nifty Realty, after 6 days of consecutive losses, it seems to be doing well with about nearly 1% gains coming in. But if you look at the broader end of the markets, mid cap and small caps, that seems to be doing well. However, mid caps particularly seems to be outperforming the benchmark indices at this point of time. But very quiet markets at this point of time. We'll see if there's an improvement in the second half of the session. But for that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market has developed and what the stocks were in focus. Anil, signing off.